Hello, I hope everybody's doing well today. I wanted to take a little bit of time and go over an example of a cash flow statement. And it's a topic that we have not been really covering a lot really at this course. And that's pretty typical for principles level courses, as a lot of times, especially in Principles 1, we really place a lot of emphasis on the income statement, statement of owner's equity, and then of course the balance sheet. And that's really where we need to be spending a lot of time. But the cash flow statement is also really important. And before I get into an example, I want to talk about why. In theory, I could have an organization that is highly profitable. And if you think about that, let's say, for instance, I have a business that um, made $100,000 in a month, $100,000 in revenue. And we had $50,000 of expense during the month of total cost of goods sold during that month. And so when I think about that, my net income is $50,000, and that's great. I mean, I look at it, and that may even be well ahead of what I had budgeted. And so, of course, I'm feeling good about things. But if I look at it and my cash on hand is $10,000, and maybe I've got a ton of receivables, in that month, if I had $100,000 worth of revenue, but 90,000 of it was receivables and 10,000 of it was cash. Let's say I go into the following month and I need to buy $40,000 worth of supplies, and I've only got 10,000 in cash. Well, that's a problem. Even though I'm profitable, even though I've made money, and even though I'm certainly sitting in the black in terms of revenues versus expenses, I don't have enough cash to fund what I'm going to need to purchase the next month. And that's going to be an issue for me, because that means I'm going to have to borrow to fund my growth, or borrow to fund what it is that I need to be able to purchase. And so that puts me at a disadvantage, and it effectively gives me a pay cut, because now I'm going to have to borrow and then later pay back these purchases with interest. So that affects my break even, that affects my margin in a negative way. So cash flow is really important. Cash flow is one of those things that can really affect how we operate. And so as you're thinking about this statement, be thinking about the direction cash is going. Revenue is somewhat, to a degree, irrelevant. We're really thinking about where is the cash going. So I'm going to give an example here, and I'm going to share my screen, and we'll just kind of work through some problems like we typically do. Okay. So the basic form is pretty simple. And we've got an example. We've got a beginning cash balance as of December 1st of $3,800. And let's just look at this real quick here. Let's say as of this year, I guess last year, 2022. And we got $3,800. That's how much cash we have on hand. So if you think about a cash flow statement, there's three basic types of activities. You've got cash flows from operating activities. And so this is what you do. This is your core business, and this is how you make money. So this would be similar to how the income statement reflects revenues and expenses. This reflects cash coming in from operating activities. And keep that in mind. It is the cash that comes in or goes out, not the revenue, okay? And there is a difference. Cash provided from, or cash flows rather, from investing activities. So if you think about investing activities, buying supplies, buying buying a stapler or buying paper that you're going to use in copies and that type of thing, that's not an investment. That's going to be something that we use up in an operating cycle. But if I think about buying a piece of equipment that's going to give me an ongoing useful life, that's an investment. I'm going to use that for years and years. And when I book that transaction, I'm giving up one asset for another. I'm giving up cash in exchange for equipment. Now, on my balance sheet, really I've got a change in the composition of assets, but I'm not, my basic position is still the same. I've got the same number of assets, but I see that on the cash flow statement. I see cash diminish because I've had to make this purchase as an investment. And then finally, we've got cash flows from financing activities. And this is where we're really thinking about activities that relate to our shareholders. So let's get into it. Let's say in this example, I have dividends to shareholders in the amount of $4,800, okay? And so if I go back to, let's just give us an example here. If I've got my cash flows from operating activities, and then let me give myself some space. Cash flows from, okay, investing activities. Okay, give myself a little more space. And then cash flows from financing activities. If I look at this transaction, this $4,800 distribution of dividends to shareholders, where would that go? Well, again, operating activities is a dividend distribution. It's really not, because while it's true that we had positive net income that allowed us to be able to make distributions, this is something that really affects our shareholders directly. And as I mentioned, if that's the case, it's going to be down here in our financing activities, and that's going to be a negative number because that's an outflow of cash. We are taking money out of our equity to be able to fund these dividends to shareholders. Cash received from customers. In the amount of $31,900. Extra zero there. I'm going to put that over here in operating activities because that is very much a revenue transaction. That's going to be something that is an inflow of cash, and the other side of that transaction would have been an inflow to revenue. Cash investments from shareholders. Okay, and this was in the amount of $15,200. I'm going to put that down here in operating activities because that is our shareholders investing in us. They're putting cash into the business. So the cash they give us allows us to be able to use funds to fund our operations. That cash represents their ownership in the business as well. Cash paid for equipment. And it's the amount of $5,800. I'm going to put that as an investment because we know that investing is going to be, it's going to give us a useful life. Now that's going to be a negative number. That's going to be an outflow of cash. Again, we receive an asset, but we're just thinking about the effect on cash in the statement. Okay, cash paid for trucks, or a truck rather, and we're saying 24,800. Same deal. That's going to be something that's got a long-term useful life, and I'm benefiting from the value of the truck purchase, but it's an outflow of cash, so it's a reduction of cash. And then finally, cash paid for expenses. We know that expenses are things that are written off directly. We are not written off, but this is an immediate outflow of cash. And presumably that's going to be something we use in operations. So what I'm going to do now, keep in mind I began with this December 1st balance. Oh, I didn't mean to do that. Home column. We began with this December 21st or 22nd balance rather, December 1st balance 2022 of $3,800. That was my beginning balance. My operations for the month are going to be the sum of these activities. And actually this is an outflow of cash. Let me make this correct. It's going to be the sum of all of these transactions. So received, paid, 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 distributed, received. That means that during the month, as a result of all my operating activities right here, all of my investing activities here, all of my financing activities here, I had positive cash flow of $2,900. And so that when I look at my ending cash flow at the end of the month, I'm going to take what I had plus what I had during the month, and I have $6,700 favorable cash flow to go into the next period. And that's how you solve the problem. Any questions on that, please feel free to reach out to me. But really, that's the basic form of a statement of cash flow. That's going to kind of always be the basic form that we'll get into different scenarios as you study further in your accounting careers. But really, just as the income statement and balance sheet really kind of follow the same form, so does the statement of cash flow. And again, you're really, in my mind, in a lot of ways, it's the simplest of the forms, because you really are just thinking about, where is the cash going? Is it coming in? Is it going out? That's really it. If you have any questions, please let me know, and I'll be glad to help. Have a great day. Thank you.